So, mass housing loans. You can get a mass housing loan, couple it with a conventional loan, which is essentially the original mass housing loan, and then also down payment assistance. You can also use an FHA loan and get down payment assistance. And there's a lot of different structures of how you can get the assistance and different income, and you got to qualify at certain income levels. I don't want to do a deep dive about the intricacies of mass housing in particular, but let's say you're a client who does qualify for mass housing, you've chatted with the lender. The ideal role of mass housing to me when I'm having a conversation with the client is a financial tool. And what I mean by that is I hope whatever lender you're chatting with, if you're having a conversation about mass housing, that you're also having a conversation with them about your holistic financial situation, because it can be a great tool and a good opportunity to have that conversation. Because ideally, even if you're buying your first house and you're getting down payment assistance and you have it structured so that your spending is a little out of pocket as possible, your ideal situation is that you do also have some form of a nest egg, right? I think that's just good, prudent first time home buyer math. Go into owning your first house with a little bit of a safety net, ideally some reserves of some kind, a good amount of savings. I think the best mass housing client is the client that could do a down payment if they needed to, but now we can use mass housing as a option and a preference of structure to the mortgage relevant to their financial situation holistically and their goals with the house, if that makes sense. So ideally, when you're having a conversation with the loan officer, hopefully you're in a good spot where you got some money to work with and you can compare apples to bananas, a FHA loan with a down payment compared to an FHA loan with down payment assistance. Look at the total payment, look at the total spend out of pocket, look at it from the angle of closing costs covered with the assistance to paying out of pocket, what to do with the interest rate, and then also a conventional 3% or 5% down compared to a conventional mass housing with down payment assistance, and then layer it even further with what you have going on for other liabilities and debts, because maybe it's a combination of instead of the down payment and keeping my debts, I can do the down payment assistance and I can pay off my debts. And maybe that translates to a better holistic outcome of total monthly cash flow. And if you're a first time home buyer early in your career, early in your stages of savings, the ideal position that a financial advisor would want to get you to as early as possible in your trajectory of savings is having minimum exposure to fixed payments monthly at the beginning so that you can have a trajectory of savings. Trajectory. I'm not saying that right, but either way, you know what I'm saying. You have the ability to save more into your 401k, put it into investments, savings in general. So sometimes moving around the money on the chessboard is the best outcome of the mass housing strategy conversation with the client is it allows for that to happen. It's not just only a way to say, hey, I don't have any money. Now I can get down payment assistance and buy a house. It's a good way to say, hey, there's this assistance I qualify for. What does it look like in comparison to if I did save for a down payment or spent my money I have now? And which one of these is the best outcome for me? It's a good tool in that conversation. And a lot of the times it goes 50-50, where a client says, you know what? I'm going to actually do my down payment assistance and do it this way, or I'm going to do my down payment myself at 5% and also pay my debts off and not get the assistance because I don't need it. And it's not always plug and play perfect match. I think that's the big thing you should be having conversations with, though, is the holistic view of any structure of a mortgage, and what the potential outcome could be and how you could take it and apply it. And ideally, you're coming out of that transaction. Whenever you're buying a house, I like to view it as you're making a big shift, particularly first time home buyer. Now you're doing a whole new thing you've never done before. You've got to have conversations about different outcomes because it's just going to help you be more confident in that new position.